All right, let's jump right in. Today we're diving into the world of Forex trading.
Forex.
But not the get-rich-quick stuff. No, we're going deeper. We're going to look at this guy, Jason Fielder.
Okay.
Have you ever heard of him?
I have heard of Jason Fielder. Yeah, he's a pretty under-the-radar kind of trader.
Yeah, he doesn't do a lot of the big, flashy marketing stuff.
Right. He kind of lets his trading do the talking, which I always appreciate. I'd rather learn from someone who's actually out there in the trenches. You know what I mean?
Absolutely.
Yeah.
So we've got our hands on this document that he put together, and it's packed with some really interesting insights into his approach.
Yeah, and what I think is really interesting is that he's got this principle that he calls the 60.30.10 rule, which he claims can really, really transform how you approach trading.
The 60.30.10 rule. Okay, that's a catchy name. I gotta admit, I'm curious. What's the big idea behind this rule?
So you know how in trading, everyone always talks about trends, right?
Oh, yeah.
The trend is your friend.
Yeah, the trend is your friend. That's like trading 101.
Right, exactly.
Yeah.
But Fielder, he kind of flips that on its head.
Yeah.
He says that markets only actually trend about 30% of the time.
Really?
Yeah, and breakouts, which are those kind of explosive price movements, they only happen about 10% of the time, and the other 60% of the time.
Whoa.
The market is actually moving in a counter trend.
Hold on. So you're telling me that most of the time the market is actually moving against the prevailing trend?
That's exactly what he's saying.
That's wild.
And you think about it, if most traders are kind of fixated on those trends and breakouts, right?
Yeah.
Then those counter trend moves are where the real opportunities might be hiding.
It's like everyone's looking in one direction and he's over there like scooping up all the good stuff.
Yeah, exactly. Like everyone's looking for gold.
Yeah.
And he's just quietly picking up diamonds.
Okay, I'm starting to see why he likes to stay under the radar. That's like having a secret weapon.
Right.
But before we go too far, I think it's important to define some of these terms. What exactly do we mean by trend, counter trend, and breakout?
Sure. Yeah, that's a good point. So let's imagine a currency pair like the British pound against the US dollar.
GBP-USD.
Yeah, GBP-USD. That's the shorthand for it now. When the price of the GBP-USD is consistently moving in one direction, either up or down, we call that a trend.
Okay.
A breakout is when the price suddenly bursts out of a defined range.
Oh, so it's like a big sudden move?
Exactly, like it's breaking free from a cage or something.
That's gotcha.
And then there's a counter trend, and that's where the price moves against the prevailing trend. So it's kind of like swimming upstream.
Okay.
These moves can be smaller and less dramatic than breakouts.
Yeah.
But Fielder argues that they're much more frequent and actually more predictable.
More frequent and more predictable. Okay, that's interesting. But how did he actually come up with this 60.3.10 ratio? Did he just pull that out of thin air?
No. He's not just making this up. This is where his really meticulous approach comes in. He actually analyzed years and years of historical data on major currency pairs.
Wow.
Like he would look at the daily price movements of the GBP-USD, for example, and use tools like Bollinger Bands and price action channels.
Okay. And these are basically like visual tools that help traders see how the price is behaving over time, right?
Exactly. It's like a way to map out the market's movement so you can start to see those patterns emerge.
Interesting.
And what he found was actually pretty remarkable. So, for example, in 2008, he did this analysis of the GBP-USD. He looked at 240 trading days and found that the price was trending about 33% of the time, breaking out about 9.6% of the time, and then counter-trending about 57%.
Wow. So those are pretty close to his 60.3.3 ratio.
Yeah, exactly. And he saw similar patterns across other currency pairs, too. So it wasn't just a fluke with GBP-USD.
So this isn't just a random idea. He's got the data to back it up. But I got to be honest. I'm still trying to wrap my head around this whole idea of counter trend trading. It just feels so counterintuitive. Like, why would you want to go against the flow?
I get it. It does go against everything we're kind of taught about trading, right?
Yeah.
But here's where things get really interesting. Fielder argues that focusing on counter trend moves can actually be less risky than chasing trends.
Less risky.
Yeah. Think about when you're trading with the trend. You're basically betting that the price will continue moving in the same direction.
Right. You're hoping to ride that wave.
Exactly. But what happens when that trend reverses?
You can get wiped out.
You can get caught in a big losing trade.
Yeah.
Yeah, exactly.
Yeah.
But with counter trend trading, you're actually looking for those moments when the price is likely to reverse.
Okay.
You're not trying to ride the trend all the way to the top. You're taking advantage of those smaller swings within a range.
So it's more about recognizing those turning points in the market.
Exactly. And because these counter trend moves are happening so frequently, you have more opportunities to potentially profit.
Okay, I'm starting to see the appeal here, but how do you actually know when a counter trend move is about to happen?
That's the million-dollar question, right?
Yeah.
And that's where Fielder's approach gets even more fascinating. He has this concept he calls predictable moments of opportunity.
Predictable moments of opportunity. All right, now you've really got my attention.
These are specific times when, based on his research, the market's behavior becomes more predictable.
Okay.
And he's identified 2 key scenarios where these moments tend to occur.
Lay it on me. What are these 2 scenarios?
The first one he calls night owl trading.
Night owl trading.
Yeah, it's all about taking advantage of the decreased trading volume that happens when major banks in certain regions are closed.
So while everyone else is sleeping, we're out there making pips. I kind of like the sound of that.
Right. It's a unique approach for sure. And then there's pre-announcement scalping, which focuses on the market behavior just before major news announcements.
Interesting. So instead of getting caught up in the volatility of the news itself, you're looking for opportunities in the calm before the storm.
Precisely. It's all about finding those moments when the market becomes more predictable, even in what seems like a chaotic environment.
Okay. This is all starting to make sense now, but how do you actually spot these predictable moments of opportunity? What are you looking for?
That's a great question, and it's something that we're going to dive into much deeper in the next part of our deep dive.
Okay.
But first, let's take a closer look at why Fielder believes that counter-trend trading is so powerful, especially when it comes to developing a winning trader's mindset.
All right, I'm ready for that. Let's get into it. So we've talked about how counter-trend trading is such a big part of Fielder's 60.3.10 rule.
Yeah.
But I got to admit, I'm still a little bit hesitant.
Okay.
It just feels like you're going against the natural flow of the market, you know?
Yeah, I get that.
Is it really less risky than trend trading?
I think Fielder would probably say that it's not necessarily about being less risky,
Yeah.
but about managing risk differently. Remember, his whole thing is about finding those predictable moments of opportunity.
Yeah.
When you're counter-trend trading, you're not trying to ride that massive wave, like you said.
Right.
You're looking for smaller swings within a range.
So you're not betting on this big move in one direction.
Right.
You're kind of capitalizing on the market's tendency to kind of bounce back and forth.
Yeah, exactly. And that can actually be a more conservative approach, especially if you're just starting out,
Yeah, that makes sense. But I've also heard that counter-trend trading can lead to overtrading.
Oh, yeah.
Getting so caught up in those small moves that you end up taking way too many trades.
That's a valid concern.
Yeah.
But Fielder emphasizes that counter-trend trading isn't about being in the market all the time.
Okay.
It's about being really selective
Right.
and only taking trades when your system gives you a clear signal.
So it's not about quantity, it's about quality.
Exactly.
But there's still a part of me that wonders, is it really possible to make consistent profits by focusing on these smaller counter-trend moves?
Right.
Wouldn't it be more profitable to just ride those big trends when they do occur?
That's where Fielder's approach gets even more interesting.
Yeah.
He actually suggests that mastering counter-trend trading can actually make you a better trend trader in the long run.
Really?
Yeah, he says it's like learning to walk before you run.
Okay, I'm intrigued. How does that work?
He argues that by actively trading in these sideways markets, these range-bound markets,
Yeah.
you develop this much deeper understanding of the market's nuances.
Okay.
You start to see those subtle shifts in momentum, those little hints that the market might be about to reverse or break out.
So you're kind of training your market intuition almost.
Exactly.
Like a sixth sense.
Fielder uses this great analogy. He says it's like being an old married couple that can finish each other's sentences.
Oh, I like that.
You spend so much time observing the market's behavior, you start to anticipate its next move.
That's awesome.
It's not just about making profits from those counter-trend moves. It's about developing a deeper understanding of the market that can benefit you in all types of trading.
Yeah. Okay, that totally makes sense. And, another thing that comes to mind is that counter-trend trading could potentially help you develop a more disciplined and patient approach.
Absolutely.
Which is something I've struggled with, getting impatient when the market's not cooperating, and then that leads to bad decisions.
Yeah, I've been there too.
But Fielder's point is that counter-trend trading kind of forces you to slow down, to be more deliberate in your decision making.
Yeah, because you're not, trying to time the perfect entry or exit on this massive move.
Right.
You could take your time and wait for a high probability setup.
Right. Yeah, that makes a lot of sense. And it's funny, he actually compares counter-trend trading to picking the low-hanging fruit.
Oh, yeah, I love that analogy.
You're not trying to climb the tallest tree in the orchard, right?
Right.
You're focusing on the fruit that's within easy reach.
Exactly. Be efficient, be consistent.
Yeah, not trying to hit a home run every time.
Right.
But what about those times when the market is trending?
Yeah.
Does Fielder just ignore those opportunities?
No, he doesn't ignore them.
Okay.
But he approaches them strategically. Remember, his whole system is built around recognizing those predictable moments of opportunity.
Right.
So when a genuine trend emerges, he's ready to capitalize on it.
So his counter-trend trading skills actually give him an edge when it comes to trend trading as well.
That's exactly right, because he spent so much time observing the market's nuances.
Yeah.
He's better equipped to recognize when a true trend is formed and when it's more likely to last.
So it's like he's got this extra layer of market awareness that other traders might be missing.
Exactly. And that's what makes his approach so unique.
Yeah.
He's not just focused on one specific style of trading. He's developed a system that can adapt to any market condition.
Okay, I gotta ask, how does he do that? What's the secret sauce?
Well, that's where things get really intriguing.
Okay.
Fielder hints at this proprietary trading system that he uses called the triad trading formula.
The triad trading formula sounds pretty mysterious.
It does, but from what he reveals in his document, it seems like triad is designed to seamlessly adapt to all three market conditions.
Okay.
Trend, counter-trend, and breakout.
Wow.
He calls this auto-adaptive technology.
Auto-adaptive technology. That sounds like something out of a sci-fi movie.
It does, doesn't it?
Yeah.
But the basic idea is that triad is not a rigid set of rules,
Okay.
It's this dynamic system that adjusts its parameters based on what the market is doing at any given moment.
So it's like having a chameleon of a trading system.
Yes.
Constantly changing its colors to blend in with its surroundings.
That's a great analogy, and it's this adaptability that Fielder believes gives triad its edge.
So it's not just about understanding counter-trend trading. It's about having a system that can actually put those principles into action.
Exactly, and that's what we'll be exploring in the next part of our deep dive.
Okay.
We're going to take a closer look at this mysterious triad trading formula and see how it actually works in practice.
Okay, so we spent some time with Fielder's 60.3.10 rule.
Right.
And this whole counter-trend trading thing. But now I really want to dive into this triad trading formula that he keeps mentioning.
Yeah.
What's the deal with this auto-adaptive technology? It sounds so high-tech.
It does sound pretty fancy, doesn't it? But I think when you strip away all the jargon, what Fielder's really talking about is a system that can adjust to the market.
Okay.
Whatever the market's doing.
So it's flexible.
Exactly. Flexible, adaptable.
Oh.
It's like, think of a self-driving car.
Right
It's got all those sensors that are scanning the environment. Yeah. And it uses that information to make decisions about speed steering, braking, all that stuff.
So triad is kind of like that, but for trading?
Yeah, exactly. Like it's scanning the market and adjusting its strategy based on what it sees.
Makes sense. But how does it actually know what the market's doing?
Right.
What are those sensors picking up on?
Well, that's where it gets really interesting. Remember those predictable moments of opportunity we talked about?
Oh, yeah. Yeah.
Well, it seems like triad is designed to specifically recognize those moments.
So it's not just reacting to every little price movement.
No.
It's looking for situations where the market's behavior is a little more predictable.
Precisely.
Okay.
Fielder doesn't really go into too much detail about how triad works in this document.
Right.
But he does give us a few clues. He mentions using a combination of technical indicators,
Okay.
price action patterns, even things like volume and volatility analysis.
So it's not just one magic indicator. It's like a whole bunch of tools working together
Exactly.
to paint a bigger picture.
Yeah, and that's what makes it so powerful. It's not relying on just one single data point.
Right.
It's looking at the market from multiple different angles.
Gosh, okay, so this is all starting to make sense now, but there's one piece of the puzzle that I'm still missing.
Okay.
Remember that transitional hedging thing that Fielder mentioned?
Ah, yes, transitional hedging.
What is that all about?
He's very vague about it in this document.
Yeah, very vague.
Almost like he's leaving us hanging on purpose.
Right.
But from what he does say, it seems like transitional hedging is a way to manage risk when the market's behavior is uncertain.
Okay, so when Trade can't really tell if the market's trending or counter-trending or breaking out,
Right.
it uses this transitional hedging to protect itself,
That's how I interpret it.
like a safety net.
Exactly. A safety net for those moments when the market throws you a curveball.
Yeah, because even the best systems can't predict the future with 100% accuracy.
Right, exactly. And that's why risk management is so crucial.
Absolutely.
It's not just about making profits, it's about protecting your capital so you can stay in the game.
Stay in the game. Yeah, I love that. This has been so insightful. I gotta admit, I was a little skeptical at first about this whole 60.30.10 rule and counter-trend trading thing.
Yeah.
But Fielder, he really makes a compelling case.
He does. And even if you don't end up adopting his exact system,
Yeah,
I think there are some really valuable lessons here
absolutely.
for any trader.
Like understanding how the market really works. Being patient, being disciplined, and always managing your risk.
Couldn't have said it better myself.
So for our listeners out there, the next time you're looking at a chart, think about Fielder's 60.30.10 rule. Remember that the market might be counter-trending more often than you think.
Right.
And maybe, just maybe, those counter-trend moves are where you'll find your edge.
Yeah. And if those counter trend moves are happening 60% of the time, what strategies could you explore to profit from them?
That's something to think about.
Yeah.
Thanks for joining us, and as always, happy trading.